Hello and welcome to KYC. I am Sharad Dubey and you are watching KYC at NDTV Profit. And today, the company which would be in focus would be Protean E-Gov. And likely to actually give you a heads up about this company, why we have actually got this company in our special segment. And there are certain questions which we need to ask. The first one being is, will this depressed margins which we are seeing, there will be a turnaround in the coming quarters or the pressure will still remain there? The second question would be, is the diversification very important going ahead for the company, and will AI help the public stack overall, the digital infra stack which the company claims it is it going to help in the long run? What would be the opportunities for the digital transformation going ahead, especially in emerging economies? When I speak about emerging economies, it's the Asian markets or the African markets, and even the more expansions and acquisitions, since they have a high cash reserve as well. So this is the important questions which we'll be asking. But just to give you a flavor about the company, the overall details. First of all, the company was incorporated in December 1995, an old company, IT-enabled solution companies and e-governance related solutions which the company was offering. Also, let's see what the company actually does. It's the largest issuer of identity, the digital tax identity we call PAN. Interestingly, they have developed citizen-centric e-governance numbers, the solutions coming in, and 21 nationally critical e-governance stacks are there. So we keep on getting newer stacks. Main categories, of course, let's pull up the foundational identity, tax systems and pension systems is something which the company operates in. Digital identity, e-KYC is very important, followed by digital authentication and the e-signature. This is where the company focuses on. But if you look at the PAN business, that is giving the majority of its revenue, you see the company issues fresh PAN cards, also reissues them, and also runs tax information network as well. So you see it's a flywheel coming in the taxation space. And overall, they have a market share of 64%. And look at the numbers. That is something to look at, the PAN card numbers, the online PAN verifications. And interestingly, they issue 7 to 8 crore PAN card in a year. Let's just see the tax services revenue, how that has panned out. And you see the numbers are humongous for the company's size. It has been on the higher tick. And of course, these are the H1 numbers which you are looking at, the slight numbers coming down as well. But let's look at the PAN issuance, how they have panned out. Overall, if you see, that has been on a rising trend. And now you see some kind of a slight degrowth coming in from FY24 to FY25. But the pension services, that is also something to look at. The revenues are been doing well. The social security and the welfare numbers, that has also been on the stronger side. It's a leading market share of almost 97% coming in. Interestingly, if you look at the identity service, overall we had already discussed, it's basically coming on the online PAN segment. And see this, these are the 4 important services coming in. And lastly, the revenue stream wise, where does the company actually get its revenue from? Most importantly, tax services, followed by pension services, lower names coming in this space. But let's go back to the show. There are important rating parameters which we give for our segment. And based on that, we give the overall rating. It includes income statement, balance sheet, cash flow, return ratios, and also shareholding, street trade valuation, and street coverage. And the first, we could say the first parameter I have picked up is the income statement. Company is also in focus because of its quarterly earnings in the month of September. Those numbers were kind of a decent, kind of a mixed. But let's look at the overall numbers, how they have panned out. They have been doing well. For FY24-25, the growth did stagnate, and the margins, there was a dip coming in each year itself. So that, of course, raised concerns in my analysis, and the margin trajectory on the lower side. But the Q2 numbers, at least the revenue front, has been decent. So I have given a neutral rating going ahead for Protean E-Gov. The second parameter is balance sheet. It's very important to track this parameters. And if you see the cash and bank balance, that is something which I'll be watching out for. It has been decent. Not so much of deployment has happened. 130 odd crore of balance is still there, and it's a stable balance sheet. Largely, it's a debt-free company. Also, from my side, this will be again a neutral. Nothing very great to see in this balance sheet, but important is the cash flow segment. Cash flow also has 2-3 important components which we track, and this is an asset-light business. We could say a tech business. The operating cash flows have been on the upper side. If you compare the FY25 numbers, if you could just show the cash flow numbers, the PAT numbers, That itself has also done well. That's around roughly 93 odd crore rupees. It's stable, but there's a margin which we generally analysts have, that is called a cash flow conversion to PAT, and that is back on the higher side. That's almost 209 odd percent. So net, I would give a thumbs up when it comes to the cash flows. The fourth trigger is the return ratios. Return ratios is a cause of concern for me. FY29 to FY22, we saw a significant jump in ROC, which is called return on capital employed. But after that, it has been a downhill for the stock. FY23, the number was 13%, then came to 11%, and now currently it has come down, you could say, almost below the 10% mark. So that becomes a concern for our analysis, and same thing goes for the ROE numbers also, which is called the return on equity numbers. There was a jump till FY20, but after that it has been on the downtick. So it will be a thumbs down for Protean E-Gov when it comes to the return ratios when we calculate both ROCE and ROE. Shareholding is very important to track this. Shareholding, if you see the FIs and DIs, they have been actually on a reduction spree. FIs, they held at most 10% stake in March 24, but then see September 25, the recent exchange filing, it's down to below 8% mark, and DIs, that's also significant downtick, almost 20% of the DI holding has been sold out as well. So the institutions are not giving a thumbs up, and the public shareholders, that has actually increased a lot. It's almost 70% float is held by the public, that is the retail audience. And after that, what happens is the stock, a lot of distribution happens in these stocks if larger hands are not holding these counters, and because of that we of course saw a downtick coming in the stock prices as well. So from shareholding pattern point of view also, I am giving a thumbs down. Street cred, not much to happen, because we see large hands are leaving the counter, and you could say retail hand is taking in. A 1 month performance, not much, 3% down, 6 month 32% downtick, and there's a massive share underperformance coming in because of a huge loss of contracts which was earlier announced by the company. So that is something which the street was spooked by. 5-year performance is also nothing much has happened. If you're holding this stock right now also, most likely you are in loss. So it will be very important to actually understand what's the long-term view coming in, and because of that, in our show later on, we will be talking to the management as well as where does this company stand, what happens to the investors or the shareholders or even our viewers going ahead for this counter. So for the street cred segment, I will be giving a big thumbs down in this segment also. Valuations are 7th parameter. So once the prices fall down, valuations do become attractive, provided a company has a good growth trajectory going ahead, and this is something which is a rule of thumb we follow as analysts here. And the EPS numbers, look at that, that's well below the 30 times in FY26. The P also 31 times, 27 times. So largely earlier these trades were between 40 to 45 multiple they used to trade with. Now that significant correction has happened, it is, you could say, in line with some large IT companies as well, but we cannot call this company an IT company. It is somewhat like a platform company, but it has a digital public infra angle to it. So that is something which is important. But yes, the government exposure is on a very high basis as well. So for valuations front, since they have become attractive on stock fall, I will give a thumbs up. Let's give the street coverage. Not much coverage, just 5 analysts are there, but none of them surprisingly have a sell rating. I checked the numbers, the buy, there are 4 calls coming in from analysts, while hold, it's only 1 analyst giving that call. So net, there is an average upside, and the Bloomberg average which we took is 36% for the next 12 odd months. That means there is a good chance that the stock might bounce back. That's what the analyst community is feeling. But from my side also, it will be a strong thumbs up. But before going into the entire setup of Protean E-Gov, let's ask the management also how things pan out. Let's just revise with you the KYC ratings, how things have panned out for Protean E-Gov. Their numbers had come, of course, a week ago, and we see largely nothing happening in terms of income statement. The Q2 numbers were decent, but on the bottom line, there was some kind of mix. We've given a neutral to it. Same thing follows for balance sheet, but cash flow, that conversion ratio was good. So I've given a thumbs up for it. But then again, the return ratios, that's the main culprit here. Over the last 4 odd years, you're seeing it's continuously falling. ROCs, ROEs getting impacted. So these are the important ratings which we had given. But the same thing goes for shareholding. Institutional participation is down in this counter. Street cred, nothing much returns coming for the shareholders. So the patience is being tested for this counter. That's why this makes the valuations attractive. And even analysts are bullish because of this. So we have given you the entire criteria how this move has happened, and KYC rating, the final rating, not much to offer right now. Company still needs to prove itself to the markets. 4 out of 10 I have given, 4 out of 8 I have given for the KYC segment. Now, of course, there are some positive points, there are some negative points, but we would like to know directly from the horse's mouth, from the management, where does the company stand and how things move ahead. Of course, the first question we will be wondering, we will be actually joined by the MD and CEO, Mr. Suresh Sethi for Protean E-Gov. And sir, a strong growth has been seen in the revenue sequentially. What led to this, and what would be the growth guidance for the tax services and central record keeping services going ahead?
So it has been a good quarter for us. We've shown good growth. So there has been a 19% growth quarter on quarter and a 14% growth year on year sequentially. What has really contributed to this has been, strong performance across some of our businesses. CRA clearly again is showing growth. We have a 12% year-on-year growth clocking in that business. There have been a lot of underlying, tailwinds also with the pension regulator taking up a lot of initiatives and reforms to open up the ecosystem for better pension penetration. In spite of a healthy growth, we still have a huge headroom in that business. What has been especially strong for us also is the fact that our new businesses, for the first time this quarter, have contributed 12% to our overall top line. And this is the first time we've hit a double digit over there, and we expect this to continue, a long time focus of the company to diversify into new areas. The new areas have been strongly led by our investment into building multiple digital public infrastructure rails across different sectors of the economy, be it insurance and be it other areas like health, agriculture, digital commerce, and that has contributed. Happy to share that we almost have now an order book of 1600 CR, which is almost double our annual revenue top line. And that is contributing well. And there has been good contribution again this quarter from our new businesses.
That's pretty interesting. Suresh mentioned these points, but there are some concerns also which the street has regarding your company. The first question is, of course, the margins. However, they have seen a dip and now in higher teens. What led to this margin pressure, and what would we be looking going ahead?
So see, margin pressures are coming, one from the fact that there has been a slight change in the revenue mix for this quarter because of the project-led businesses kicking in, which naturally have more project-related margins as compared to the other core businesses. Naturally, we've also set up a subsidiary this last quarter in Dubai. So there have been some expenses to that extent. So there has been a little bit of impact of margin because of these couple of events. But otherwise, we will see better margins as some of the products and SaaS-related revenues also start picking in, which is basically the app layer in which we were, contributing and building above the digital layer. To just give the background, as we move into unlocking multiple sectors of the economy, the idea is to again see what can be done in the app layer, where you are talking about consumer and enterprise consumption of those services. And the company has again put investments behind people, teams, technology in building the app layer.
Interesting. Suresh mentioned about the margin growth levers, and this also includes your product and SaaS segments, you could say consumption as well. But company still has sufficient cash balance of around 800 odd crore rupees. Suresh, any kind of deployment or acquisition plans on the anvil?
The share works both ways. One, naturally, it gives us the strength to participate in large projects. And even as I called out the order book earlier, part of the cash gets deployed into funding for these projects, because when you're working in project-led business, there's always a mismatch between investment and return. The other area clearly we've been calling out is looking out at interesting emerging tech opportunities, any businesses which give us either tech edge or they give us market access. So we are looking always on the lookout for those inorganic growth opportunities, and that is where the balance sheet gets used. And last but not the least, also is the fact that we've clearly shown intent and have got a few wins in the international markets, which again are largely turnkey projects and which again consume some of these funds. So that's where we are putting the money to good use. And the company continues to remain debt free with a strong, cash balance with us.
Well, we spoke about international order wins also, but there's a landmark mandate you have won in the domestic markets also. That is the UIDAI landmark mandate coming in, and that's worth 1,370 crore rupees. Now, give us some details, give us the flavor. What are the suggested timelines going ahead, and will there be incremental revenue contribution coming from this segment? Please quantify that.
So that's an amazing deal, because first of all it gives us or places us in a position where Protean becomes the only company today to provide two foundational IDs, be it PAN and now it is Aadhaar. So we are really contributing at the foundational level in building our digital nation. And this mandate again is something we've already started working on. We should start seeing our quarterly revenues coming in the third quarter of this year. But clearly on complete deployment, we see a revenue of 200 crores per annum coming annually in a recurring manner once we have completely deployed across the mandate we've got for deploying in 188 districts.
That's pretty interesting. The third quarter is something which you'll be looking out for. The bump up will happen from the UIDA order. That's a 1370 crore order win. And to put in perspective, 1600 crore is the order book of the company, and the revenue is just half of it. So these are the three numbers you should know when you are hearing what the management is stating. But of course, apart from that, speaking of diversification, what's the growth outlook looking like for the new business? What kind of revenue contribution we can expect from this segment going into the future, Suresh?
So definitely, Sharad, it's a good trajectory for us, and we see this consistently growing, because as we go beyond our core of PAN, pension, and digital identity at the foundational level, we clearly see our diversification into multiple DPIs, playing out. And these are either largely project-led revenues which come in. As we are unlocking this value, we are also building a very strong suite of BFSI products, which are, be it on the API marketplace front, could be products like enabling CKYC filing for financial institutions. And there are other areas which come in as you unlock value across multiple sectors. And other than that, clearly international remains a focus, and our investment in also powering enterprises with infra using our sovereign Protean cloud, be it for our own large scale projects or to enable the industry, are the other areas we see coming in and starting to contribute. So we see this consistent growth and diversification coming through. And we are clearly very glad with the double-digit contribution which has come from these businesses in this quarter itself.
That's pretty interesting. Suresh, AIs have also been the talk of the town, especially with a company which is your digital public stack, as you say. So how will this company benefit from this? Will we see some incremental gains coming in the financials going ahead?
So definitely the answer is yes. If you look at AI, I would say it's become pretty embedded in a lot of our businesses now. So there is an external sort of application of AI, because as we look at the various projects we are working on today, one is in building the core tech itself. Whether we take our CERSAI, CKYC revamp, we are looking at Bima Sugam of building the insurance DPI. All these areas today have some element of AI coming in, be it from a deduplication perspective, from a fraud risk management perspective. So these technologies are, I mean, AI today is a pretty ambient sort of, technology getting embedded into various workflows and streams. Clearly, the other application of AI is naturally making ourselves more efficient because as we even, whether it is managing large scale projects, managing CRM, doing internal digitization of services and driving efficiency over there. So AI for us naturally means that we have to make ourselves digital first internally, and we also have to leverage it for the various businesses that we are bidding for. And otherwise, if we look at the application layer, clearly AI does bring the differentiation factor into a lot of the build we do over there.
Interesting, Suresh. AI is the future, but the present is also there, which is important, especially for the global expansion front. So what are the plans for this segment? Any kind of strategic outlook coming in?
So global markets, sure, the focus has always been to look at our core, strength and competence in building digital public infrastructure. So we are clearly looking at economies and countries where the digital rails are at various stage of early evolution, and even if we see the government of India and PM's push for supporting the digital infrastructure for the global South, the focus has been clearly looking at Africa, Southeast Asia, Middle East as of now. We have multiple engagements going. I would like to also share that out of all the exposure and experience we've had in building digital public infrastructure, we are also taking a DPI in a box approach, which technically means that you are looking at a modular playbook of various digital public goods. And to just explain it further, you're looking at identity as a DPG, you're looking at payments as a DPG, you're looking at verifiable credentials. When you bring all these together, you are able to put together a workflow or a stream where you are able to create enablement for an entire ecosystem, be it from a discovery perspective, fulfillment perspective. And we are actually using this playbook to create faster implementation, which moves into months rather than years. And you can do quick POCs and you can show value on the ground at a very early stage. Currently, as we reported earlier, we've had 2 wins. So in Morocco, we set up an education DPI. We've had a engagement again working in Ethiopia, and we are currently involved in multiple countries at this stage. And in some cases, there are advanced discussions for getting the mandates.
Interesting, Suresh. But my last question would be on the order book front. You had mentioned earlier 1,600 crores is the number. But I want to dig deep into that. Which sectors, this demand is coming in from, and how the inquiry is coming?
So see, when we look at the entire bouquet of services, we see the focus still coming very closely on identity and BFSI-led infrastructure, which is getting generated. So when we look at our, clearly the large components of this order book, there is the CERSAI KYC, which is again a KYC initiative to make the KYC processes more efficient, and therefore again power the entire BFSI sector using that, be it the capital markets or the regulated entities in the financial services sector. The other area is clearly building the insurance DPI. Insurance, I think if we look at it, the 4 verticals of financial services, insurance, capital markets, pension, and banking. So that is going to be a great initiative because it will connect the insurance sector in a very meaningful way and create efficiencies and unlock value by bringing all intermediaries and the customer at the heart of it. And lastly, Aadhaar again is a project which is a very foundational in nature. So a lot of identity and BFSI-led expansion is happening as we see it.
Well, that's pretty interesting, a BFSI-led expansion coming in. But thank you very much, Suresh, for taking out your time and sharing the growth plans for Protean E-Gov. And interestingly, it's a KYC-related business and coming to a show which is known as KYC. But if you're tuning in, to give you the entire gist of the conversation over the last half an hour, the 3 important management takeaways we have taken. The new business revenue, that contribution is expected to go up. It's already jumped from 4% to 12% odd. Going ahead, the margins might be, on the higher side, especially with the product and the SaaS segments. These segments, when they get their launch in, a higher margin accretion might take place as well. And lastly, the 1370 crore order coming from UIDAI. Now this revenue accretion, that will start kicking in from the third quarter as well, and that's pretty much very much important if we look at the company's growth trajectory, as the stock is already beaten down as well. But that's enough for our show at KYC. Stay tuned to NDTV Profit.